Now we're going to get to Persian Gulf exports. What's important? Why is this action even taking place in Iran? I'm going to roll back the clock 4 decades. This is a Congressional Research Service report for Washington D.C. insiders in 1987. This puppy spans my entire life, basically. This is the state of play as far as we've talked about the shipping vessels in the Persian Gulf, the Strait of Hormuz. That is the key talking point you hear on everybody's mind. It's financial markets, every headline. Persian Gulf trade, when is it going to open up? It's basically zeroed or shut down at this point,
right,
because of the lack of insurance industry capacity. All right. So you look at Gulf exports. Obviously, we know Persian Gulf. What have they been doing? Their economy is largely underpinned by oil exports and natural gas exports, ramping up after the development of oil production. But this has been basically the entire second half of the 20th century, right? Post-World War II, Saudi starts, turning on oil fields, all of that. And they become increasingly critical to global energy markets. Back in 1987, so if you look at market share of Gulf Coast country coalition member exports going to the rest of the world out of the Persian Gulf, Japan was consuming like basically 48%. So Japan had owned the lion's share. And then over a quarter of that was France. US was basically like 5.5% in terms of market share. But basically what we see, think about these countries, right? USA, France, Germany, and then Japan. They're the post-war kind of partners on the Allied side that came out victorious out of World War II. So your Western European democracies, United States, and then Japan came in as basically a proxy state overseen by MacArthur in the U.S. coming out of the post-war order. And basically this market was divvied up amongst those powers. Now you get to the modern day, this is all of that trade, imports and exports counted here. So gross trade, we can kind of get a footprint here of what are the endpoints. We've got supply here, all of those oil producing countries. I got the 6 GCC countries, and then I'll add in Iraq, because post Iraq War II, flipping from Saddam to this, I guess, Shia coalition government, it's kind of in a similar order, kind of not, but let's count it as global trade. But this is basically a proxy for all of the seaborne exports from the Persian Gulf that's then traded with the rest of the world. You'll see who owns the market share. So starting from the point, why would the U.S. even get involved in this region? We don't have much market share in this in terms of the actual goods moving, right? You see the blue. This is the source here is the Observatory of Economic Complexity. It's oec.world. Pretty good graphics here on trade. U.S. has no real market share here in terms of our shipping interests from source to destination. We're not actually a big consumer here. We're not reliant on Saudi oil exports in the same way we were post 1970s oil shock up until let's say 2008, where fracking technology reached the point where the U.S. could once again be a net energy producer, which is a modern development in the last 10 to 15 years, but a huge shift. U.S. isn't big here on trade. What we own is the financial side of this, and we'll get to it later. Who owns this market now, right? We talked about France accounting for a quarter of gross trade through the center, and then Japan being roughly half in 1987. This is the European footprint. I don't know if we added up all these pink shares, maybe it's a quarter, maybe. But yeah. What you'll see here, this is a much more important source of goods or source of production of hard commodities for Europe and those members of the Allied post-war coalition than it is for the U.S. itself, right? So there's your split point. in my opinion.
Yep.
And then what's actually happened here, your Asian economies have just grown, and this is I'm just pointing out the obvious here. Um, Nothing very insightful about this, but the growth of the Asian economies has basically squeezed out the European economies from this from these supply resources or from this source market, and I think that's largely reflected in what we're seeing. Remember, we talked about the world leader quotes at the beginning.
Right.
Ursula von der Leyen stressing the price cap. In open competition, the Asian market is like dominates European competitiveness for these resources. And without that price cap, Europe is no longer able to um, kind of incorporate this the supply source for its own needs.
Right.
Is largely what I see playing out here. Um, all right, so we talk. Why is the U.S. involved here?
Yes.
If it's not a major, like it doesn't run the ships. We don't have the shipping industry footprint, so we're not making money there. It doesn't consume the output of these source economies, so that's not
Right.
important. I think the signal you're looking for here: five of the six countries in the GCC hard peg their currency to the USD, and the one that doesn't, Kuwait, it pegs to a currency basket, which it doesn't release the weights on, but it includes the dollar, the US dollar, also the British pound, the euro, and the Japanese yen. So five out of six, and then some weighting. All of these economies um, denominate and anchor their own sovereign currencies to the US dollar. So as we think about, I'll go through in terms of hard pegging a foreign currency to another countries. Just focus here on the US dollar. What you're actually doing, it's very similar to coinage in my mind. So when you think about old world, we'll get into that in a second. Might actually be our very next slide.
Yep.
We're going to talk about the Spanish Empire here. One slide ahead, we start with the Spanish Empire, which outcompeted, we've talked about this before, via seaborne exploration, and Portugal was the sister twin of the Spanish Empire. They eventually merged. Um, what it outcompeted was those landborne trade routes that we call the Silk Road today.
Yep.
What it actually did in terms of its money, right? We talked about the importance of the silver trade, the uh, cross-continent maps, the trade route, where did the silver go, where'd the goods from Asia go. Slave trade was involved here. Sad story for human history. But silver was the key money, but to actually put it into a useful form, um, the Spanish Empire started coining the milled dollar. You call them pieces of eight, right? You can chop them up. Eventually became the doubloons, all of that. But what you're doing here is you're actually you're forming a money, a unit of currency, but you're anchoring to an embedded standard of value so that your counterparties in trade can quickly and easily, with low cost of verifiability, um, high trust, et cetera, high portability, all of those features of a money. What you're doing is basically anchoring or pegging a money, in this case, to hard commodity and silver to facilitate trade. I'd argue that same thing. Think about the dollar pegs. Like there's a lot of them today. Pegs to the US dollar. Talk about the dollar in terms of a general concept that pervades what we think about. We anchor to the US dollar. Dollar represents um, in the long term frame, once you go back to this silver coin that we're looking at here, like exactly that, it's a medium without a centralized authority. In this case, going back to the Spanish milled dollar, um, that facilitates trade between counterparties who may or may not trust each other in cross-border, like globalized transactions, is like as broadly as I can kind of
You're talking
framework.
about
And
like
this
the
is some,
network effect of everybody being on the same system, right? If we all agree that we're going to
yeah,
use this unit of account or this medium of exchange, I don't have to worry about how do I transfer, between these different
yep,
exchanges and all of that. Yep.
yep. All right. So I'm talking about very vague, fuzzy things here. I'm trying to nail Jello to the wall, but hopefully we'll start to anchor it in. This is what mind print hash is all about,
Hmm.
right? So I'll I'll put it in. Why? Let's look at this silver coin, and this coin on the left here. This is what I could find. This is the oldest Spanish milled dollar that we have in like real life today that still exists, right? Because what actually happens with coinage, it gets melted down. Like let's say we stamped a Roman coin or one kingdom's coin. Um, it moves, with ships across the ocean to another endpoint. Over time, you'll see the coinage get melted down for its melt value whenever the economic profit to do so um, uh, like facilitates, like encourages that behavior. What do I mean by that? All right, today, think about our dollar coins today. I'll talk about the U.S. situation a little bit. So, why do I bring up the Spanish milled dollar? This was actually the anchor of value in the U.S. Constitution. So, if you go back, like Control F through the U.S. Constitution, look up gold, look up silver. That's how we anchored money. If you want a good book, Money for the U.S. and the 13 colonies, right? Um, Good book on this history is Pieces of Eight by Edwin Vieira. He's still alive as far as like recent months. He's getting up there in age, but if you can find a podcast, like search for that individual. He is extremely well informed. You're going to learn something every time you talk to him. He's a living national treasure in my opinion. So incorporate all you can from him while he's still out there shedding knowledge. Most listeners, if you like this show, you'll like anything he has to say. But U.S. anchored to this thing on the left, this chunk of silver, right? This minted Spanish Empire coin. They didn't look exactly like this after a couple hundred years, but same way we showed the Spanish Empire plus ultra, go outside, go explore outside of those pillars of Hercules, go trade. Um, that was basically start with the 1500s. By the late 1700s, late 18th century, Spanish Empire was past its prime. It was on its way down. But these coins, because they were such a reliable measurement of value, which is in this case the intrinsic value of the silver metal that's embedded, um, they were still used as the primary money and trade with mostly the Caribbean, right? As um, East and West were interacting with each other, New World and Old World, all of that stuff we talk about. Spanish Empire was essentially gone, defunct by then. Yet the money still lived on. And I think that passage with the Constitution, you see that embedded. If you actually go Control F where it talks about money, you see the handoff from what the Spanish Empire was doing with the milled dollar. That's handed off to the U.S. So what we're actually drilling at here, trying to nail the jello to the wall, that standard of value that's represented in this, it's not a fully open empire, right? You still had Spanish Spanish empires or trading territories would only interact with each other. The Portuguese may or may not interact with it. They had to do a hard line, who owned what with treaties back in the 1500s. English, privateers, all of that, their trade was like explicitly forbidden, right? They didn't interact there. But this was your competing monetary network, I'd argue. Competing with what? We'll get into that in a second. Oh, right here. The pound sterling kind of operating framework. So I won't go deep into this here, but the pound sterling, we're all familiar with it. When you think of sterling, what does it mean? It's a specific alloy of coinage that was really established with this Tealby penny to lay the grounds for the sterling silver standard. And if you think about sterling silver, all the fans will know it's 92.5% silver, 7.5% copper. Hold up the Lombardi Trophy every year at the Super Bowl, anything Tiffany, stuff like that. Sterling silver has a brand unto itself. That's like really, it really predates all of this stuff, even that we talked about with the Spanish milled dollar. This goes back to the 8th century with like Charlemagne's Frankish Empire, is how you get these weird kind of ratios. You have what, 12
12
pence
deniers.
to a
Yeah. Yeah.
shilling, 10 or whatever, 10, I don't know. It's like you get to 240. It's not metric system compliant. But anyway, this legacy kind of British system kind of hopped on the back of like Charlemagne's Frankish Empire and Northern Europe, all of that. Um, and so what you're seeing here is really, in my opinion, two hard forks kind of colliding that are embedded in the streams of, like, we're not even talking like modern history. Like, these things have antecedents, 500 to 1,000 years in development. So you talk about those dollar pegs of the GCC.
Hmm.
Uh, they're anchoring to the dollar in the middle. Same thing with like the Hong Kong dollar. Um, we've talked about this before, like the dollar standard. Like, you've got Singapore dollar, Aussie dollars, Canadian dollars, New Zealand dollars. Even the, like, what we think about as the Chinese yuan, it actually, yuan, my understanding, in Mandarin means round, and it was their effort at establishing a standard coinage. And this is only in the early 1900s, but when China even got around to this, um, where they start coining silver into a kind of a minted standard that everybody can agree on to operate trade through, and the Chinese economy as recently as like 100 years ago, right? So you're on that same round, they're still on that same, they're trying to accomplish the same thing, pack in some value, put a wrapper around it, and then that thing can uh, facilitate trade between counterparties from A to B, and A to B can be anywhere in the world. Japanese yen, I think the yen in its own nature, I'll double check on this, but if you really prod your AIs, I want to say yen and yuan come from that same root etymology, like round. And you're starting to build up what are humans with their action actually trying to get at here?
Right.
And I think that's kind of enlightening. Um, what the GCC countries, by pegging to the dollar, they're trying to tap in to this underlying kind of network effect that plus ultra go beyond represented. I don't know if I talked about this on the coin, but those two pillars you see, those are representative of the pillars of Hercules. And then you've also got um, some of the Latin here. I think it's the PIV. That's like, it's actually plus ultra. Some of the other coinage you see it struck. This is like coinage or mint technology that's 700, 800 years old, that good or precise.
Sure.
If you've seen a minted coin today, for example, like we've got much crisper technology, and plus these things also sat at the bottom of the ocean for 700 years, so they're not going to look perfect. But that's what you're going out here, and then you see the R. I think a R was stamped for real or something like that, and that meant it's from the Spanish sovereign crown that stands behind the weight, the purity, all of that. But all the symbolism, it's embedded in there. These are kind of vaporous topics we're talking about here that this trade is really representing. But when we start to attach the symbolism, the history, we have something more physical, corporeal to pin to the wall and understand what's actually going on.